July 8th edition of Backroads of Illinois with Cesar Delgado. We were Central Illinois Agriculture Source, and in the Midwest alongside in Central Illinois Agriculture, we were glad you're here with us. We hope you had good holiday weekend, including your barbecue on the holiday weekend weather premium, the acreage report. HPI, the weather forecast is going to be mixed with the temperatures and the weather pattern. We are going to see the weather pattern is going to be wet and dry in the Midwest and central U.S. Some farmers are getting worried about the weather. In California gets high temperature range of 110 seconds from the high ridge for this week in the west coast and part of Mexico. Meanwhile, the cooled weather conditions for the 4th of July in the Midwest. The acreage report was bearish from June 28th from the Department of Agricultural. This report was bearish from June 28th. The corn was bearish for this report. However, the markets are trading down near $4.25 because of the weather premium for right now. HPI in Colorado and vaccine is then tested by Moderna. HPI H5N1 is reported in the dairy herd in Colorado, and a dairy worker is affected with minor symptoms of H5N1 for this case. Moderna will create a vaccine against the H5N1. The pharmaceutical company is creating the vaccine against the H5N1 or HPI. Moderna will be in trail of the vaccine for bird flu. We are going to talk with Dan Hussey from Zaner Hedges. We were coming back with Dan Hussey on back. Today, we were joining with Dan Hussey from Zaner Hedges. Welcome to the show. How are you?
Good, Caesar. Thanks for having me. How are you doing today?
To tell our audience about this report on June 20th from the Department of Agricultural.
Sure can. It was, to say the least, a very confusing day. We were all waiting patiently for the number to come out. I'm sure yourself, as well as everyone else, fingers on the trigger to try to get that number from the USDA for both the quarterly grain stocks and the acreage report that came out that day. The number was released a little late. It certainly was less than I'm certainly, or excuse me, in terms of the market certainly was less than excited by it as we sold off after the report. And the big surprise and takeaway from that day was that very large or larger than expected corn acreage number coming in at 91.5 million acres. The trade was expecting 90.35 million acres, so 1.25 million acres more than the trade expected. Definitely was a shock to the market and certainly was higher than my own expectations. For soybeans, the June acreage report showed an 86.1 million acreage number. Trade actually was a little bit higher for the beans at 86.75 million acres, and was generally a little lower than even that prospective planting number we had gotten earlier in the year. Wheat acres came in at 47.2 million acres compared to trade averages of 47.65, so not much difference there. It was really a report that shocked the world with how high the USDA had pegged those corn plantings, and certainly after this spring, with a little bit of a late plant and some weather conditions, the market is certainly left to digest how many of those planted acres will actually get harvested this fall. The other side of that June 28th report was our quarterly grain stock estimates, where corn as of June 1st was estimated to be on farm stocks was estimated to be at 4.99 billion bushels. That was about 100 million more bushels than the trade was averaging and guessing before. Soy came in at 970 million bushels, only about 10 million bushels more than the trade was expecting, with wheat bushels coming in at 700 million bushels. That's a little bit higher than the 680 million bushels the trade was expecting there. Overall, though, again, that higher than anticipated corn acreage number leads us into this Friday's report, which is great. We're able to have this conversation now because we've got a WASDE report this Friday where, while the USDA won't be giving us any updates in regards to the acreage, it will be a chance for them to revise yields. We won't see another acreage change until I think this August report is the first time they do that. Um, but nevertheless, if they leave yields unchanged, we're anticipating a 181 bushel an acre yield for corn, which would come multiply that number by the 91.5 million acres they told us in our last report in June, would come to be about a 16.5 billion bushels of production for corn, with a 52 billion bushel per acre, excuse me, um, national average yield potentially for beans could leave us with 4.47 billion bushels of beans totally produced. So those will be the big numbers we'll be looking for on Friday's report, this Friday when the WASDE updates are released.
How about the beans in the report?
Yeah, in the June 28th report for soybeans, again, it came in out at 86.1 million acres there with a 970 million um, quarterly grain stocks estimate for June. And again, at 52 billion bushels excuse me, 52 bushels an acre, if that is the trade guess here for yield on Friday's report, we'll be looking at around a 4.5 billion bushel production number for the beans. Obviously, markets have sold off quite a bit since those numbers have been released, and the soybeans, in particular, have really come down. And that to me suggests that not only is the market underwhelmed perhaps by current exports, but we are anticipating with the good weather we've been having, maybe a pretty good production for beans this year. We know that exports have been generally been stronger in South America than in the US, and that's been kind of hurting soybeans without China coming to the commodity table and buying beans from the United States. That's been a kind of a real drag this last couple weeks.
Do you see more weather premium for right now because we pass on the report?
You know, that's a really good question because a week or two ago, and maybe even on Friday last week, I would have said, hey, markets are building in a little bit of weather premium again. And then after the trade today, we've found ourselves considerably lower. But it seems to me that the better than anticipated weather for the next 6 to 10 days, an 8 to 14 day precipitation outlook, for example, it looks like we're going to be above to near normal for rain potential across the United States, and particularly for that eastern corn belt. And I think a lot of that has to do with the hurricane that's coming and making landfall in Texas now. Hopefully, everyone can stay safe. It does seem like it's going to dump a lot of water, though, across the Midwest and certainly into the eastern corn belt where we need some. That'll probably keep some stressful temperature away from the corn crop for the most part. And of course, bring some rain to the beans that might need it. But generally speaking, that rain from this hurricane that may be coming, I think that's a big reason why the market sold off here today. I like to think that we need to build some premium into the market. I certainly hope we will. But it looks like at this time we're getting weather events across the country that are keeping that from happening, and is a big reason why we're lower in the price of corn and beans here today and over the last week. Um, it doesn't seem like we're getting that stress you would anticipate this time of the year.
What is your sources for the weather in the Midwest alongside in the upper Midwest?
I usually go to NOAA's website, NOAA.gov. I look at the 6 to 10 and 8 to 14 day for precipitation outlooks they have there. I also use QTweather.com. The gentleman that maintains that website basically pulls all the weather from NOAA, the northern, I forget what it stands for, but nevertheless from the U.S. government websites. I'm not a weatherman, so I'm not good at predicting the weather that we'll have. I certainly just like to watch those 8 to 10 day and 8 to 14 day forecasts to see how they might shift here. But weather's weather, right, Caesar? It can change at any moment. And if we don't get that rain, and we do get the higher than average temperature outlook that they're expecting, I would say that over the next few weeks, there's a pretty high probability of building in some weather premium because we are going into the pollination season for corn. And that is beginning, I know, right here in Illinois. I can see some tassels coming up as I drive around.
Yes, sir. How do the commodities sector is going to be lower for next month?
Yeah, I think everybody likes talking about that inflation trade right now. That's been a hot topic for the last year, year and a half. But I do think that the inflation trade has kind of run its course. Markets were inflated last year and the year before from that effect on the market, and now we seem to see prices coming down across the commodity spectrum. Um, you know, Markets that were early leaders like lumber and sugar and others have backed off of their highs somewhat. And I think that at least for U.S. production or U.S. row crops and others like cotton, we've had fairly favorable weather conditions over the U.S. over the last couple months into this growing season, and that's keeping a cap on our commodity markets in general. I also think the relatively stronger US dollar has kept some of our export partners at bay. And China has, our biggest buyer of grains, that is, has kind of been non existent in the soybean market, which leads a lot of people to be concerned about demand in China for commodities. And if China's not buying our commodities, our biggest trade partner isn't there participating. So that kind of keeps prices in a lull. And one last, comment on the inflation trade. I usually like to look at inflation as a rising tide, where prices of everything kind of go up. And then, once they peak out, they'll come back down together. And I think we're at that point in the inflationary cycle or the inflation trade where we're trying to find the new normal for how low prices might want to go during this period. Do I believe they'll go as low as they
Mm,
were in 2018? Possibly
mm,
not,
mm.
but we'll see.
Why is that into the commodity prices on inflation?
Yeah. Well, inflation's a measure of.
Dan, we've been having some news on
Mhm,
H5N1 or HPI in Colorado.
mhm.
Could you explain to our listeners what is going on with the cattle markets?
Absolutely. I think as of late, we have at least been able to determine that the effects on cattle have been rather limited. Now, whether or not the disease spreads to humans and creates other, issues like I don't want to, God forbid, we don't have another pandemic, but that's another story. But just taking a look at how it affected the cattle markets, we can go back to earlier this year when about the start of the year and into April, we started getting the reports of as migratory birds move their way up from South America through through the Midwest and through the United States on their way to Canada, as they do every year. They brought with them that H5N1 or the HPAI, the highly pathogenic avian influenza, with them. And those waterfowl and birds would be mixing in around cattle and hog herds for that matter across the country. And we could almost watch the disease as we saw positive tests come back from cattle make their way north. Started in Texas, and I know there were reports, and I want to say Kentucky, and then Michigan, and certainly in Colorado as well, of the disease amongst cattle herds. But what we did notice was that it's at least not killing the cattle. And this is, of course, now 7 months later, right? We are months into this, the first reporting of the disease, and it's spread. So we've learned a lot since the beginning of the epidemic and beginning of the virus, spreading across the country. And it seems to me that cattle prices have, I don't want to say ignored it, but have certainly come to grips with the reality that this disease is out there. It's not killing cattle in droves, and there certainly hasn't been a lack of demand for beef prices in the meantime. So what does it mean for the future of cattle? We could certainly, if there's continued or another heightened outbreak, we could see maybe a similar reaction in cattle markets that we saw in April of this year, which was a pretty big drop, as there were fears that this could lead to a loss of demand for cattle and for beef. Very similar to how mad cow, oh, I can't remember the year, but in the early 2000s, mad cow caused a bit of a scare and for consumer demand for beef prices to almost disappear overnight. That was definitely the fear for HPAI here in the, earlier this year. As the summer progressed, as consumers didn't find it, found that it didn't pass on through the supply chain. In other words, when we take cattle to slaughter and make and process to beef, we weren't seeing a spread to humans, and that traces of the virus were not affecting people. We didn't have the fear of a lack of demand, and so cattle prices have rebounded. Live cattle are above the prices of April as of today's close. Feeder cattle prices have been very sideways, which is um, another conversation for as to why or how that's the case. Because I see a lot of demand for cattle and particularly for beef. I think the box beef cutout here, I was just reading before we joined here, was 59 cents higher today at $330 for the box beef cutout. That's up $1.02 since last week and nearing its previous high here at $333. So cattle prices are holding firm even in the face of this disease that is still prevalent and out there. But I believe, the thought process and certainly the way the market has digested it is that, hey, it's not something to be immediately fearful of unless we hear a change. And, if cattle start dying or we start seeing more cases spread to humans, I think that that would change the narrative altogether. As of right now, it seems the news has um, I don't want to say been abated, but certainly um, the market will be looking for something else to really scare it again.
What is the Packers for the price for right now?
I'm sorry, could you repeat that? What is the Packers price right now?
Do you have any final thoughts about these commodity, the weather premium bird flu?
Yeah, bird flu again. I kind of want to. I hope we don't hear any more news, right? I hope we don't hear more cases. And so long as that's the case, I think the fear of widespread pandemic breaking out isn't going to be the news of the week, right? But it's something to pay attention to because it already affected market prices this year. Weather premiums, I definitely think this hurricane coming through the Midwest right now, um, the narrative may not be about really, high temperatures. We might be needing to think about, widespread destruction, big hail events, derechos, all of those other extreme events that can affect the market and drive weather premiums. Because this year, it's not looking like it's going to be a really hot and dry summer like we had, last year and the year before. Droughts are generally disappearing on the map because we're getting weather, weather events that are bringing rain. If those stop, however, over the next couple of weeks, and we definitely get some hot temperatures as the forecast suggests, again, it's if that rain comes is the big difference. But if we get those hot temperatures and no rain, and this hurricane doesn't bring relief water to the eastern Corn Belt and to some other places that might need it, I think there is a possibility to get some weather premium built back in. But at least today, I really felt that the sell-off we saw in the market was in a reaction to the hurricane potentially bringing water, to where it's needed. And generally speaking, for the commodity trade as a whole, I think that we are finding that rising tide of inflation, and how far out that tide goes right now is kind of the name of the game. So for all of the viewers at home, if you bring up big weekly or monthly charts of corn and beans, you can probably over the last 20 years draw a trend line against the lows of those charts, and you can see how far down or how far out that price might, the tide might go after this last inflationary cycle. But I definitely think with the current fiscal policies in the US and current global trade, inflation isn't done. It's just we're in a period where it has cooled off. So, yeah, I guess that would be kind of my final thought for everybody at this point as to what I'm thinking and seeing, in commodity markets over the next few weeks.
Thanks, Dan.
And thank you, Caesar, for having me. It's been a pleasure. Anytime.
This is Dan Hussey from Zaner Hedges on back roads of Illinois. We were looking at the commodity prices on back roads of Illinois. Corn futures finished in down 7 to 8 cents. Soybean futures finished in down 3 to 4 cents. Wheat futures finished in down 3 to 5 cents. Now that we are going to talk about the livestock market for today on back roads of Illinois. Cattle futures finished in down 8 to 9 cents. Live cattle finished in up 2 to 4 cents. Feeder cattle finished in down 8 to 10 cents. Lean hogs finished in down 7 to 4 cents. And Texas crude oil finished in down 8 to 7 cents per barrel. Dow Jones finished in up 2 points. This is your agricultural commodity markets update on back roads of Illinois. Welcome back with us on back roads of Illinois. This been wild with the weather. We saw the temperatures in down 70 degrees in central Illinois. Otherwise, we will take it from the weather. However, the farmers is concerned with nitrogen effective in the crop because of the weather, increasing the nitrogen loss to the field for this growing season. You've been listening to Back Roads of Illinois. Thanks to Dan Hussey from Zaner Hedges. We're running out of time on Back Roads of Illinois. You can listen to our show on YouTube and whenever you get your podcast. For Back Roads of Illinois, I am Cesar Delgado. Have a great day.